It is June 12, 2026. At 9:30 in the morning, the opening bell rings at the New York Stock Exchange as a company called SpaceX begins public trading for the first time. Within seconds of the first trade, a historic threshold is crossed. This IPO instantly makes Elon Musk the world's first individual trillionaire. To understand the math of a trillion, think in terms of time. A million seconds is about 11 and a half days. A billion seconds stretches back 32 years. But 1 trillion seconds takes us back 31,000 years, to a time before any human civilization had even begun. This level of wealth concentration creates a massive structural imbalance. Musk's personal net worth now exceeds the entire GDP of most modern nations, placing a single individual in control of more capital than dozens of governments combined. Despite these historic numbers, Musk admits that only 0.1% of his wealth is liquid. This means his status is built entirely on paper, tied to the fluctuating value of company shares rather than actual cash in a bank. That paper wealth is being supported by companies currently deep in the red. SpaceX recorded a $5 billion loss last year, and in just the first quarter of this year, they've already lost another $4.28 billion. While the valuation climbs, the revolutionary products often vanish. The Hyperloop, once promised to move passengers at 600 miles per hour, was quietly wound up in 2023, leaving behind nothing but an abandoned steel tube in the desert. If the core companies are losing billions and the breakthrough technologies are failing to materialize, what is actually supporting this trillion-dollar valuation? To understand how a loss-making company becomes worth trillions, we have to look at how the stock market actually assigns value. Economist Burton Malkiel points to 2 distinct frameworks. The firm foundation theory values companies on profits. The castles in the air theory drives price by investor psychology. Musk's empire is this ultimate castle. Investors buy a sci-fi dream of Mars colonization. Research values SpaceX's fundamentals at $780 billion, while market sentiment inflates it to $2.2 trillion. This reveals Musk's most successful innovation, the engineering of financial hype, which generates far more wealth than any physical technology he has ever launched. To turn that untouchable paper wealth into real-world luxury, billionaires use a financial strategy called buy, borrow, die. It allows them to spend their fortune without ever selling a single share. Here's how it works. By keeping the money in stock, they avoid paying capital gains tax. Instead, they use those shares as collateral to take out massive low-interest cash loans from banks. They get the money to spend while technically avoiding a tax event. Musk used this exact mechanic to buy Twitter. He mortgaged $62 billion worth of his Tesla shares to secure a $12.5 billion loan from the bank, purchasing a social media giant without paying a cent in income tax. The results are staggering. Between 2014 and 2018, Musk paid a tax rate of just 3.2%. For comparison, the average American worker typically pays between 20 and 30% of their income to the government. This strategy allows the world's wealthiest people to effectively opt out of funding the public roads and infrastructure and public systems that their own companies rely on to function. Because this wealth is built on psychological hype and borrowed cash, it is uniquely vulnerable to a sudden change in government policy. To protect his empire from regulation, Musk funneled $290 million into Donald Trump's campaign. The political return on that investment was global. Almost immediately, diplomatic pressure was used to fast-track Starlink's approval in India, removing national security hurdles that had stalled the company for months. Domestically, the favors were just as significant. Before Trump's inauguration, Musk faced 40 active lawsuits and federal investigations. After taking office, the new administration began dropping those cases one by one. The most critical favor targeted the stock market itself. The administration pressured the SEC to change its fast entry rules specifically for SpaceX, allowing the company to bypass the standard multi-year waiting period for an IPO. This rule change had a devastating consequence. It automatically forced the retirement savings and pension funds of millions of everyday Americans into Musk's overvalued company. By leveraging his close proximity to power, Musk has effectively taken on the influence of a shadow president, engineering a system that gambles public financial security to cement his private trillion-dollar status. While Musk hoards this capital, the cost of solving major global crises is a small fraction of his net worth. Only 10% of his wealth could lift 800 million people out of extreme poverty. When Musk challenged the UN to show how they would use his money, the World Food Program Director David Beasley provided a concrete roadmap to end starvation for 42 million people using just $6.6 billion. Musk ignored the plan and kept the money. History judges the ultra-rich not by the balance on their bank statements, but by the tangible suffering they had the power to stop and chose to allow. This trillion-dollar empire is ultimately fragile, tethered to the shifting whims of political favor. In 2025, a single public spat with the president caused Tesla's stock to plummet 14% in a single day. If the political administration changes in 2028 and that governmental protection vanishes, this inflated net worth is at risk of being cut in half overnight. It is time to look past the myth of the self-made billionaire. Avoid investing your own capital into companies driven by personality cults, rather than revenue and solid fundamentals. The trillion-dollar milestone stands as a monument to tax avoidance, broken promises, and the corruption of the American financial system.